Good morning. All right, looks like ES gapping down modestly by 10 points. As mentioned yesterday afternoon before close, we spotted a bearish B wave triangle, most likely terminating at SPX 5745. This triangle is favorably intact as long as it doesn't cross the Z wave extreme. And if this holds, if this structure holds, we should see a push down to the 5700, 5685 area. Maybe a little bit more downside to 5655, but more so anticipating a new low to get bought and reverse to the upside for a second or B wave. So mainly just watching for that. On the fractal time frame, from the NFP high, looks like a 5-wave down. 1, 2, 3, 4, 5. So leaning that, why does this keep happening? Leaning that this corrective rally gets sold. Could see a little bit more bounce here, maybe to the 4th wave extreme. And then we take out the prior day low, which ES came very close to doing so. About a point away. Oh, look at that. All right. We have a M5 FEG here, which should act as resistance if we were to rally back to this little zone right here. The setup actually looks pretty clean. We have what looks like a bearish WXY model. And if you look at this pattern right here, we did have a triangle, but it was a bullish B wave triangle. Let's just say A, B, C, A, B, C. So this is a corrective WXY model. Never crossed that high. Up the overnight lows, and then NFP crossed these highs for sharply lower. So yesterday's low should favorably be taken out, especially with this impulse down formation. And we have a M5 FEG as an area of interest that should act as resistance if price were to rally back to the zone, target yesterday's previous day low. Market opens up in 5 minutes. NQ holds a similar pattern, what looks like a 5-way diagonal from the data high. Like it's lacking the M5 FEG that ES holds. Small 3-minute right here, aligning with the 4th wave extreme. But NQ also holds that same WXY model formation here. So yesterday's low should be crossed before potentially reversing back to the upside for a second or B wave rally. Working out this H1 FEG. We get a close above this for NDX. That will increase confidence that we are going to reverse to the upside. Drawing out the fib measurements. So since the first wave was extended and the third wave was shorter than the first, the fifth should be shorter than the third and abide by a fib ratio. So since it's a triangle, it's a little bit more difficult to have a well-defined target range, but somewhere in this area should act as a termination point for this fifth wave, and then we should start to burst to the upside, trending higher for a second or B wave rally. Now if this were to occur, knowing whether or not it is a second or B wave rally can be difficult. I would say a more shallow correction, maybe just taking price above Tuesday's high, then reversal, immediate reversal would favor like an ABC down for a larger first wave. If you look at Nvidia, give me a second, I just have to find the drawings that I did yesterday. Nvidia holds a set of a 5-3-5 pattern, so if this were to rally, it could be a fourth, then decline for a fifth, while NASDAQ and SPX rally for a B wave. So that's why I'm more open to seeing a B wave rally opposed to a second wave. All right, market is starting to push back up. See if we could touch this M5 FEG, targeting the previous day low. Most likely it should. If you look here, NQ actually made a lower low, ES did not, so there's a bullish SMT here. We could see some relative strength for ES tapping into this M5. Price is struggling a little bit. Yes, actually looks like a 3-3-3 double zigzag if it trades below the 50% retrace. Almost tapped it. See if it actually does. All right, we're in. Don't want to see a 5-minute close above this M5 FEG. I just want to see price retrace greater than 50% of this leg up. All right, gonna move the stop to this high right here since we have a three-wave move. Second leg, retrace greater than 50%. Coming into an M1 FEG, so we could see a little bit of a relief bounce before making the push lower to yesterday's low. But this looks like a bearish WXY model. With this corrective like structure. And maybe this is 1, 2, 3, 4, 5. Not sure if that's valid though. All right, price is getting a little bit jumpy. I'm going to move my stop to break even. This is a little bit stronger than expected. Could actually be a 5-wave move. And we may inverse this M1 right here. So just getting that first 15-minute open chop. Both NDX and SPX inverted this M1 FEG. So increasing odds that we'll make a new high of the day, but still rolling bearish that we're going to cross yesterday's prior day low. Interesting. Price is just crossed this E-wave extreme. Now this looks like it invalidated this triangle formation. Still doesn't look bullish, and SPX ES does look like a 5-wave down. So still want to see price reject here. We could get a FVG right here on the 1 minute and then close below that. That'll increase confidence and odds that we will resolve lower to yesterday's low. But at this point, it's better to wait until that actually happens instead of jumping in front of the train. I don't really like how we're retracing greater than 50% of this impulse, but so there is a chance that we keep going to take out these highs, invalidating the triangle pattern right here. Hmm. I think there's a chance that this triangle is actually just exaggerated. But we're going to want to remain below the C wave extreme right here. So looking for this pattern right here. If we remain below yesterday's A wave extreme, 250 high, all right, we are now back at midnight open, which should act as resistance. And we have a M3 FVG quite clean right here. So we close below this, increase odds that the triangle pattern is playing out. price it gets above 575.95, 760, confidence is reduced that we're going to see a lower low. Okay, so prices cross the A wave extreme, so there's no longer a triangle pattern. Still looks very corrective. See how we made lower low here, lower high here, and a lower low again. So we're going to need this to remain above the 50% retrace to avoid forming a bearish WXY model. Unless this is a bullish triangle. A, B, C, D. Okay. I think this makes more sense right here. So it's probably a triangle formation, but a bullish B wave triangle. So could see this leg up get sold back into this range and then break out to the upside. But considering we are retracing 50% of the decline from this E wave, from the larger triangle E wave, A, B, C, D, E. Confidence is increasing that we have completed the fifth wave. And are going to begin second or B wave rally. Now, if SPX has this impulse down formation, it's going to have to be a flat. Not exactly sure what this pattern is. I guess it has to be sort of a 5-wave up structure right here. Fractals look quite corrective, but considering that we've retraced, 786% of the impulse, ES invalidated this triangle. This could just be a C wave of a flat correction to take out the 830 highs. not seeing so right now I'm looking at NDX, see if we have a bullish B wave triangle, and I'm not seeing that because this low right here across these lows, I believe. Yeah, so this low pick up these lows, so we cannot trace out this ABC formation because this E wave is below the C wave, so this is not valid. Therefore, this is going to have to be, it's either a bearish WXY, still threatening that we're going to take out yesterday's prior day low, or some very tricky diagonal pattern. This is a not very clean price action right here. But bulls are using its momentum to keep pushing. Right now, lean is that we have completed the fifth wave. Just not sure what this fractal pattern is. But we should not retrace greater than 50% of the opening rally. Yeah, this price action just looks extremely corrective. I'm not sure how to count ES either just yet. But with this 5-wave down, could be a flat of some sort. Although this looks very corrective, this is extremely corrective. There is a like 5-wave price swing. See if NDX holds above the 50% retrace, as it should, to form a bullish diagonal or ABC up. All right, price is tapping into midnight, bounced off of it. Liquidity at the pre-market high, 5786. -minute FVG forming here. One minute before it closes. NDX. This does not look like a bullish pattern. And now it's getting close to the 50% retrace. If this crosses, then I'm going to have to label this as a bearish WXY. Yeah, this is not looking good for the bulls. Like a failed breakout. NQ, NDX. Like a bearish double zigzag. So we have an M5 FEG. If this gets closed below, good chance we take out yesterday's low. Really, really trappy price action to start. Got a new hourly candle. We got ABC down from the high. And I'm wondering if ES is like just a large triangle pattern itself. So A, B, C, D, E. Yes, also with relative equal lows here. We have a draw on liquidity. No FVG on the downside, at least on the 5-minute. We have one on the 3-minute. Bears are going to want to see price close below this. So 20 seconds until this 3-minute candle closes. We close below this M3 FEG. This could terminate the larger triangle pattern here. A, B, E. Not very clean though, so. All right, so we close below this. Bears pretty much want to see price reject this range quite quickly. See if we get an SMT on the 1-minute. Either NASDAQ or ES making a internal high. Or potentially reversing lower. Tough price action so far. But overall leaning bearish. NDX looks like a bearish WXY model with a 3-3-3 structure. This wave down retracing 50% of this X wave. And we have equal lows on ES along with the previous day low. All right, 10 seconds before this M3 closes. This closes below it again. We really should start seeing a push to the downside. If you look, there's actually a 15-minute SMT, and not 15-minute, 15-second or 1-minute SMT. But NQ taking a new high. ES failing to do so. I'm going to try for this actually. Stop at the SMT high. Looking for the equal lows and previous day low crossed. Looks like a impulse down the 15-second too. Price continues to close below this M3 FVG, also right at midnight, which typically acts as support or resistance depending on what structure we have. So if this is bearish, this should act as resistance. All right, that's a nice move. Now just looking at NDX, looks like an ABC down, two sets of ABC down, so this could be a bullish WXY model. All right, it's already flushing, so. But I was going to say I'm going to move my stop lower to break even now. So this green zone right here is the M5 FEG. We get a close below this, should clear the way for a new low of the day, crossing these equal lows and prior day low. But risk free right now. Since SPX produced a three-wave move down here, once this low is crossed, we should not retrace greater than 50% of this decline to avoid a bullish WXY model. So I'll put my stop right above the 50% retrace once this low is crossed. All right, we are now trading below the M5 FEG. This 5-minute candle just opened, so just looking for a close below this. I think NDX or SPX. All right, SPX just crossed this internal low. So going to be looking lower against this 50% retrace. Should not trade above this. You do this ABC down structure right here. It is a 15-second, so this, if this were to occur, if we cross above this, doesn't necessarily suggest too long, but just want to mitigate risk. There are scenarios like as I continue to do these live streams, you may see ES actually cross the 50% retrace, but SPX does not. So I always look at the SPX retrace being a more powerful indication and kind of put the 50% retrace for ES right around like 53, 55%. But just going to lock in, 7, 8 points. But yeah, price is looking good for the bears, especially if we invert this M5 FEG. All right, so I'm going to redraw the 50% retrace and then just slowly down my stop. Like a 5-wave down, 1, 2, 3, 4, 5. This leg should have a little bit more room to go. Now, if we do make a lower low, I'm going to be looking for a 5-wave structure. So from this E wave, we have a potential impulse down. So this wave down should also hold as a 5-wave down to get a 5-3-5 structure. Overall matching the pattern from the decline from the high. Every wave down was subdivided by ABC, so just looking for 5 waves down from today's high. So this could be a third wave. "18 seconds. We are going to inevitably invert this M5 FEG, increasing odds that we are going to take out the prior day low and the equal lows. Still in the M15, but definitely wouldn't be long in this. Looks like we're have formed a bearish M5 FEG in this range. Now this is a IFEG though. So now that we have a M5 IFEG and a M5 FEG, this is a balanced price range. So no reason price should break above this really, at least before taking out these lows. Price should just be bear flagging right here. don't want to see a big spike. I want to see this reject for another leg down. Let's see, this is what I don't want to see. Especially overlapping this wave down, this extreme. Want to see a bit more displacement, but stop above the 50% retrace. That's not great. All right, so it just broke above it. Want to see an immediate rejection. Gonna put my stop at this high if we start to fade. Just gave it a little bit more room with my original stop, just because sometimes you just see those big wicks. They'll cross it, but doesn't close below and immediately rejects lower, just like what we're seeing right now. So you can see, even though technically we crossed the 50% retrace, we rejected it seconds later, sharply. So this is what you want to see if price were to test that 50% retrace. But if we break above it again, then odds will increase that we could see some chop. Still will be leaning bearish against this high. Want to see price just continue to fade here. Don't really want to see it base. This also looks quite corrective on the 15-second. I don't put too much weight on the 15-second, but I like to see, corrective structure. Like either ABC up, or an A, B, C, D, E, D wave. So this looks very corrective, this rally right here. Just want to avoid trading above this. But price could easily I wouldn't be surprised if we were to cross this and then immediately reject as well. But preferably we just declined directly lower. Especially with this M5 FVG, IFVG range. ABC down. So as long as we don't break above this trend line, we should just keep pushing lower. Want to see this low cross and validating this ABC down. Now that we have an ABC down, don't want to see a reversal right here. Just a straight decline taking these lows. All right, so you could see this wave down, this potential third, is not greater in distance traveled compared to this first wave. So if this is going to be a fifth wave, it cannot be greater in distance traveled. So if it trades below 5719.75, then this could be a first wave, ABC down, or a first wave. But if it holds above, we make a new low, then rally again, could be just a 5 wave down. So that's just what I'm watching for. Moving my stop a little bit lower. I'm gonna put it right where this trend line is. Five, 7, 4, 8. So basically locking in 15 points. Ideally, we just keep pushing lower. There is just risk that this is a 5-wave decline. And we see a rally and then take out the lows. All right, this is what we want to see if this is a third wave, though. NDX just took out its prior day low. If we take out the prior day low during this leg down, then I would anticipate this being a third wave, with the second wave completing at the 10 a.m. high, or 10:24 high. All right, so this should be a third wave. Now, I typically like taking profits during the third wave decline just because sometimes the fifth only modestly completes above the third. So give me a second. All right, it might be complete now. We start to push up, bounce a little bit. I'm just going to exit. Stop raise just above these highs. You hold an ABC down or a three-way formation, so this could be a fourth. But I think I'm going to take profit here. Give it a second. I'm going to move down my stop just in case we get a 1 minute flush to new lows. All right, I am exit shortly right here. Still anticipating more downside. But this is a great example of how I use ABC down formations and how you can essentially project or anticipate when price will expand. Because most people probably see this wave down as we were coming over here, essentially as a fifth wave, take profit. But being that we overlap this first wave, that increased odds that this corrective rally was a second wave due to the ABC down structure, and that the next new low was going to be a third. price continues to push, just look at the extension targets. So we already exceeded the, oh wait, I did that wrong. Did I do that wrong? No. All right, so we exceeded the 100% extension of this wave down, this first wave, coming into the 127.2 and weekly FVG support right there. This big gap should be support to push price higher, although we are looking for a 5-wave structure. To complete the 5th wave. All right, so this current bounce should be part of the 4th wave. Should use the previous day low and 236 30% retracements as resistance. Produce one more leg down. We also have this M5 FEG range. But if we were to retrace greater than 50% of this decline, odds would increase that the overall 5th wave over. So don't want to see this retrace greater than 382, because that would be a warning sign that a lower low will not be made, especially considering if you look at second wave extreme, not second wave extreme, just the second wave in general. So this rallied 19 points. So this should be 19 points or less. So if this is 23 points, so if this is the fourth, it should reject immediately. Barring this being like an A wave of a triangle. So then technically, fourth would only be, say, 13 points. Starting to see a rejection, so going to look at the potential fifth wave targets. So I'm looking at 5 equals 1 or 6.8% of 1. So about 18, 30 points lower. But again, this is the weekly FEG. That should be strong support to terminate this 5-wave diagonal from the February high. Or I should say peak. Oh, wow. All right, so big spike, retracing greater than 50% of this line. Not sure if we traced out 5 waves down, so a little bit confusing here. I don't even know. 1049 spike, quite random. But we did make a new low, resolving this ABC corrective structure, solving the NDX bearish WXY model. So this could be completion of the fifth wave. Just not sure if this is impulse. Not sure what I would really count this as, but sometimes fifth waves are just, look like threes. But let's see. Bulls want to see a close above this M5 FEG. Now, being that this is presumably going to be a corrective rally, potentially a B-wave rally, I don't think you need to try to pick the bottom, because upside should be limited. So there should be an opportunity at close if you want to long for the next wave up if we are done with the FIP. But we're heading into lunchtime hours, so could just be some chop. Lunchtime on a Friday typically can be tough to trade. But I'd definitely rather see today's low hold now, because if we make a new low, then this is going to be a second wave rally, and then next leg down will be a third, fourth, fifth. So we could see price reach these 100% extensions, which are 35, 45 points lower if we make a new low. Certainly possible, just because this wave down does not look like a 5 to match this A wave, thus the broader ABC down pattern we're looking for. All right, 5 minutes until 11 a.m. Then lunchtime hours begin. Let's see some chop. I lean if the bottom is in, we pretty much try to grind up to the pre-market high and then fade. Set up for a push into tomorrow. Not tomorrow, Monday. Or we just grind lower this the FAG forming 5 waves down and then reverse to the upside. So price is just chopping around here. $11 a.m. lunchtime hours on a Friday. I'm going to end the morning stream right now and come back later, but this is basically what I'm looking for. If we make a new internal high right here, odds will increase that the fractal pattern is complete, and we're going to go try for the post pre-market high and then set up for a push to begin the second or B wave corrective rally. But if not, if price continues to fade, then I'll be looking at the 5680, 5670 area to act as support. Then complete the fifth wave. But at this point, probably best to just wait. Don't really see a strong setup. Send out a text update and go to the gym, then come back afternoon session. But no rush to try to pick the bottom, because we'll get an opportunity to long or close if price has completed the fifth wave. All right, I'll see you guys in a little bit.